Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble. Focus on the long term. And never, ever, ever risk money you cannot afford to lose. Let's go. Hang on. Where's it going? This is stuck. Hang on. Why is it stuck? I tried to send an emoji and it's forcing me to pick the skin color. Dude, I'm colorblind. What are you talking about? Huh. I don't know how to pick a skin color. Anyways, hey, good morning, everybody. Sorry for the emoji mix-up. How's it going? Back in the office. Feels good. Market's moving. Feels good. It's going to be a good week. Dollar's a little bit strong. Why? Whoa. What if the Fed doesn't cut 50 basis points? It's amazing how the markets seem to be running around like a chicken with its head cut off, huh? Just making a bloody mess. But anyways, markets are moving. That's good for us. So today I suggest we cover dollar pairs, yen pairs, gold oil. Yesterday we did Swissy. We can do Swissy again. Whatever. We can isolate the euro if you want. Whatever. You're the boss. I am a humble currency trader just like yourself. Just maybe a few years under my belt more. But my name is Wayne. I am the Chief FX Market Strategist for Traders Way. So if you're benefiting psychologically, emotionally, pippage-wise, if you're benefiting from these webinars, hey, man, pay it back, huh? Visit tradersway.com, open an account. If you want to start with the demo so you can test out our execution speed, the spread, the swap, customer service, all that's cool. After you download MT4, if you notice in the description below, you can download all my MT4 chart templates for free. I use a variable spread account, but you can also have an ECN account or a fixed spread account. So your way, the Trader's Way, the Trader's Way. So let me know how I can help you today. I believe it's a Tuesday. Yep, Tuesday. Anything else? Got requests now? Also, let me, while I'm asking, could you leave a comment on yesterday's video? I think it was, what, an hour and 20 minutes? Could you spend 22 seconds leaving a comment? That'd be cool. And of course, like and subscribe and all that kind of stuff. So without further ado, let us be going. So what's going on, Highlander? From Detroit, France, huh? We're in France. Okay, we got a request already. Euro dollar. Really? Okay. Euro dollar. Okay. Pulling it all up. See some sort of breakout. Cool. So it really comes down to if you're a bull or a bear. This is a day trading setup. I lost my little mousey poo, my little drawing tool. Where's my little drawing tool? Oh, there's a new version. Do I want that? No. Do I want that? No. I want this. Sunshine and blue skies in Detroit. Joe became a member of the FX Bootcamp family. Joe, you are always a member of the FX Bootcamp family. Okay, Okay, where did my little drawing tool go? Hello? Right? Finally, world's slowest pen. All right. Let's bring it back. Bring it back. Bring it back to me. Boom. All right. So, we're bear on euro dollar. I know you can't see it. This one doesn't have the watermark. But this euro dollar, is it plausible you're more bearish than bullish? Well, okay. Let's say that is pretty, right? Let's say that is pretty plausible. Okay, cool. This is a sell zone. Okay. If you missed that one, this is a sell zone. Question is, there's probably one over here. We don't really know. But on a daily, on a daily trade basis. Okay. Oops. I think we were consolidating for a few more days in there, right? Let's see. Okay. Let's check it again. Okay, this is a sell zone. This is that, right? And then what up to this? This is a sell, right? That's the M3. So you can see down here. There's the sell zone here. And then this is the sell zone there. This is a sell zone there. Cool. Okay. All you had to do is be a bear. Now, you never know if you should be a bull or a bear, but you should be consistently bullish or bearish based on your bias. So this is a buy zone. Okay, and up here is a buy zone. You see? Does the second buy look good to you? Does that look like you're buying low? Well, I suppose if it made a higher high, you could, but that evaporated pretty quickly. This is a buy zone. Oh, you would have been right for 12 hours. It's not that good, right? This is the next buy zone. Oops. You can see it doesn't look that good. Maybe a little lower would have been okay, but that's not your typical buy zone. And then this is your buy zone here. Same buy zone, you see, over and over and over again. But you can see it's not really good. But you can consistently buy, make money. Never really had a setup here, so you probably didn't get one. Probably took this one, so you're up for 12 hours and came back. Maybe you tried again, up for 12 hours, came back. This one never really gave you a setup. So, you got one winner, 2 break evens, and 2 didn't even set up. Where the other one, you were right for 12 hours. This one didn't do anything, but that one moved, so you were right there. This one, you were right for 12 hours, didn't really do much. But then today, you were right. None of them are amazing trades. The message I'm trying to get across to you is if you consistently did one or the other, you would have done all right. Now, there's a lot of newer people in these webinars, so I want you to write this down if you're newer. If you consistently trade with a bias, the market will never be consistent because it's a market. There's bulls and bears. They're buying and selling, selling, buying, buying, selling, selling, and buying. So if you're all over the place too, if you're random, and the market is random, how could you possibly expect consistent results? It's like the definition of insanity, isn't it? We're pretty close. But let's ponder a different approach. If you are consistent in your trading and the market is inconsistent, you can get consistent results. And the difference is, if you're a seller and the market becomes more bearish, you will do better. Okay? But if you're a bear and the market suddenly turns bullish, you won't do so well. But I bet you anything you won't lose a lot of money. In fact, you might even still be profitable. Okay? So the idea here is you're a bear for whatever reason, your fundamental reason, right? When the market is bearish too, you'll do very well. When the market is bullish but you're still bearish, you won't do as well. You might even still make money. But you need to be consistent. The market will never be consistent. So if you catch a bearish trend, for that period of time, you'll do really well. The trends end, and after that, you might not get very many setups. But it's better than losing a lot of money most of the time. Okay? Did you write it down? You know all these setups. Okay. See, like there is a bullish trade in here, but it didn't really set up. Maybe you tried here. It would have been okay. You would have lost some money here. That's how it goes. But it wouldn't have been much. Okay? It would not have been much. And that's just how trading goes. That's right, Jimbo. You're correct. I agree with you. Oh, why are we on here? Didn't mean to bring up exotics. Why am I on exotics? Cool. All right. Okay. Maybe market waking up. It's really strange that we care about this July Fed meeting. I'm telling you. Maybe in the the last 20 years, it's the only July meeting I remember. What's up, Free? So, do you think we are waking up? Is the market waking up, I guess is what I'm supposed to be saying. Oops, clicking all the wrong buttons today. I thought we were on here. Wow, things moved. Wow, all right, so let's go back to here. What the heck was I trying to do? I'm trying to back out. Okay, there we go. So how do you want to play this? We don't really have a monthly trade here currently. You can see, look at this month's pivots. Look at next month's pivots. Like we haven't done anything in the entire month of July. Hey! Sounds like something we might have talked about months and months and months ago, to not expect anything out of July. Right? You're either scalping in July or not really doing much of anything. So that, okay, now here's another thing to think of. By the third week of August, no later than the third week of August, we will be moving. There will be volume and volatility returning to the market. Maybe not exactly on that Monday. And, you know, I'm not saying it's going to be like a watershed moment where suddenly, boom, the market's back. But by the third week of August, you need to return to your normal style of trading, even though the market may be just waking up. Okay? So between now and then, what would you like to see? Do you want to see this? Or do you want to see this? And I'm not even talking this pair. I'm talking about every pair. And of course, congruency. So maybe I say, what will the USD do, and what would commodity currencies do? Typically, positive global macroeconomic growth will lead to demand for commodities, for example. So I might want something like this. And it might take a few weeks to set up, right? Summertime. Sit back and unwind. All right. Now I'd like for this to go up. It's not a very good bullish setup though. What are we going to need? Well, first of all, this is a bearish setup. Let's mark sort of the territory here. Okay. Okay, that's what's set up technically. Okay. Okay, you see what I mean? That's what we're set up for using technical analysis. Or this comes up a lot more and then we fall. Does anybody know this pattern? This actually would probably be a little lower. It's not an H&S. It's not a head and shoulders. It's a crown pattern. But whatever. I don't see it yet. It would have to be probably a big move created by, oh, I don't know, some economic event. Okay. So that's what it looks like right now. No, definitely not triple top. No, it's a crown pattern. Cool. So I want this to go up, so I don't see it. So I have to keep asking myself, well, where would it form if it were to turn bullish again? So I start pulling out the tools, and I say, well, actually, this price would be pretty good. So I'm like, you know what? I think it would be cool if it did this. So I'm going to start looking for that. What's plan B? Okay. Okay. So I got plan A. I got plan B. Cool. There we go. I have plans, man. What do you think? Should I be bearish in the meantime? Well, I can mark these prices, and then I can drop into smaller time frames and be a bear until it turns bullish. I don't have to, for sure. Okay. But I'd like for it to start heading up now. That's what I would like. I don't quite see it because of the 4 hour on top of us, but it would be cool if we did this. I don't expect that though, but it'd be cool. I have to keep my eye open for it. Sit back and relax. Down, 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 up, up, sell, down, 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 right? Roll reversal. Sell, down, 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 down. Roll reversal. Down, 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 down. Roll reversal. Down, 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 down. Roll reversal. Down, 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 down. Oh, oh, oh. So that could be interesting. So you see how price action often is perfect, but not always perfect. So when you get a larger extension, I tend to use a Fibonacci here. So you get like a 382, 50%, 618. And then I start looking for pivot points. Here's a weekly. Here's a monthly. So this whole thing becomes a sell zone. Just a little hint. Oh, thank you, Chuck. So now this current level is more like this on this time frame. Okay. And if we start climbing above here, then that will be technically important, right? Just remember, you got 4-hour pressure. So because of that, I would say we'd hit this and we'd probably come back and then work our way up tomorrow. Okay? Because remember, all we're looking at is a 15. So if this reverses on a 15, we have to reverse a 4-hour, which means, well, then to get a double bottom on the 4-hour, we're going to need any up to come back around and double bottom here. Or here, of course, right? So this would be the double bottom zone tomorrow. It's all the same trade, right? Your short-term long, short-term short to long-term long. Prince Philip, 5-minute. Typically. I start on the 4. I confirm on the 1. And sometimes, I might drop to a 15 or just go straight to the 5. Because, for example, if I wanted to buy here and I see it turning up on a 5-minute chart, that's enough for me. Now you might wait for a little more and do another one here, do one here. I might add a second one there, but I'll do it on a 5-minute chart. Okay, so all my trades are based on swing trades, but every trade I make, I enter with a scalp. I scalp into my swing trades. But even if I'm just scalping for the day, I still use the 4-hour for swing trading setup. Now, what am I looking for that? I'm looking for support and resistance. So if I'm scalping, I still can't scalp unless I'm at support or resistance. And then when I'm at support or resistance on the 4-hour, I drop into the 5-minute. And now I remember what's going on the 4-hour because the 4-hour tells me to be a bull or a bear. So if I'm a bear, then I must be at 4-hour resistance. So now I drop into a 5-minute and I look for reasons to sell. But I already know to sell. And I know my price. I even know the price. What most people do is they jump onto a 5-minute chart and that's all they look at. And they think they're scalpers. Okay? I can't scalp without a 4-hour chart. Okay? So after a while, it all blurs, and I don't even see the difference between scalping a 5-minute chart and swinging a 4-hour. To me, they're exactly the same thing. A lot of other people confuse it with independent trading styles, and they become very inconsistent. So let me give you a very simple example, just since we're staring at it. Let's say I'm a bull, and I analyze this as potential support, this is potential support, and we know we're in a zone, right? So, are we in my buy zone? If I'm a bull. Yeah. Okay. And you can see right? So, we don't know if it's going to go up or down, but we're in a place where I can consider it. In fact, having it fall a little further would even be better for me. But I can definitely say, yeah, I might buy this. Cool. So let's drop into a 5-minute chart. Does that look good for buying? No. Cool. So I guess I won't buy. You see? What if it dropped down here and then did a hammock? Yeah, I'd buy that. Why? I'm in my buy zone. I'm at support. I'm fundamentally bullish on WTI because of macroeconomics. Good. All these decisions made. None of that information is on this 5-minute chart. The 5-minute chart says, at what price would I be interested? Yeah, well, I'd be interested down here. I'd be interested in down here. So now what I'm waiting for is reversal patterns at these prices. So I know the price. Price? Yes. I know the price that I want to buy this. Do I know the time? No. No, I don't know when it's going to present the proper trade setup. So I guess I'll have to wait. Okay. You see what I mean, guys? Lots of people are taught to do things like, oh, if you see something like this, it tells you something to do. And if you see something like this, or if you see something like that. No, dude, no. No. So, where's support and where's resistance? Okay. This looks like it used to be support, so now that's resistance. And maybe there's something going on sort of at this price level. Okay. So if it did this and then this, I could try buying it there. But I like it down here better as a bull. It's weird, right? Oops. To say as a bull you'd like it to fall further. It takes a while to get to that thought process. But let me ask you, let's simplify as much as possible. This used to be a bottom. Okay. Does that look bullish to you? Are you supposed to wait for lower lows and then buy lower lows? Or are you supposed to buy higher lows? You might say that's a higher low. Well, that's going to be your call. But this is a lower low all day for me until we get above that. Okay. Well, Prince Philip says, okay, once you get that over, do you take every single buying opportunity? Well, that also depends. Depends on things like volume and volatility, for example, if the market is moving and stuff. But by all means, sure. Right? Okay. That's all tactics. What do you do after that? That's all tactics. None of them are wrong, right? So if you got a good market and it's moving, make as many pips as possible. Okay? So I'd be cautious now. I'd be less cautious up here. Okay? And I'd be even less cautious up here. Okay? Of course, your analysis, you could do it this way. You could say, well, I see this as support. Yeah, okay, cool. Then buy it. If you see that as support. If you see that as support. Right? So on and so forth. If you see that as support. At the end of the day, it's what you see. Okay. Are you going to take some profit on this? Okay. Well, here's the interesting thing about this. You're on the tip of the 200 EMA. That doesn't actually tell you to sell. It tells you to take profit. Okay. The reason I say that is typically if you get rid of all these pivot points, right? If all you had were moving averages, you wouldn't really know if this is going to go up or down from here because it may actually do nothing. But this is the fair market value. Everybody agrees that's the right price. So who's going to take over now and drive this? Well, you don't really know. Okay, now we add pivot points, and you could say, well, there are people here that are going to take profit, and profit taking is going to pull this down a little bit. Okay, definitely. Okay. And then you have to ask, how active of a trader do you want to be? How involved do you want to be, right? Because let's say I identify these two levels as trade levels. Okay. In that case, I would trade it this way, or I would trade it this way. Okay. And of course, theoretically, if you're a bull on this, there's that as well. Might as well carry out the process, right? The reason I say that is I don't really want to be a bear up here after a high. You can be. I don't want to be. Okay. But yeah, there's definitely going to be some profit taking here. But there's a difference between profit taking and short selling. That's all. Giga says the fundamental analysis is a day trade for it is as a day trader too exhausting. One can only trade with chart patterns, I guess is what you're saying. Fundamental analysis too exhausting. Fundamental analysis changes every 3 years, let's say. That doesn't seem exhausting to me. So if doing fundamental analysis is too exhausting, you don't know how to do you don't know how to do fundamental analysis. And then can you be a professional trader without understanding fundamental analysis? No, you'd be a poser. So you need to learn how to do fundamental analysis. Okay. So it's definitely not too exhausting. I mean, right? Okay. So you got to untalk yourself out of that. Jimbo says new long-term move underway for what pair? I mean, new move, right? We have a new Fed policy likely to be announced, right? That is fundamental. Okay, so let's do some fundamental analysis. Typically, in this situation, if the new, it hasn't been announced yet, but if the new Fed policy is to be accommodative, that means lower interest rates, then fundamental analysis will tell us the dollar will likely be weak, the stock market will likely go up, the bond market will likely fall, but actually probably not do much, probably go up as well. Commodities will probably go up, and eventually we are likely to see inflation. And once that starts to happen, the Fed will say, we're not going to cut interest rates anymore. And when they say that, or the market interprets that being said, then fundamental analysis of that new policy will be no longer dollar weakness. Doesn't necessarily mean dollar strength. We'll say dollar neutral. So that's not exhausting because there are months and months and months and months in advance of, right? Of time. So like if they meet you every 6, 7, 8 weeks, it's slow as molasses on a cold Georgia morning. It's not exhaustive. Okay? But remember, it's not what the Fed said is happening now. It's what the market interprets is going to happen in the future. So the market's already priced in a bunch of rate cuts. And in fact, a lot of boneheads have priced in 2 rate cuts happening this week. I find it hard to believe. Now, it's all right. I find this like, to me, the only reason to do a rate cut of 0.25 is that you are trying to create inflation out of nothing. You're not doing it to save the economy. You're doing it to create inflation. Kind of like when Paul Volcker during what the hell was it? Carter. During Jimmy Carter's, so Jimmy Carter was elected president. Jimmy Carter from the good state of Georgia. Prez. Okay? He gave himself a brand new Federal Reserve chairman of the Board of Governors and chairman of the FOMC. And instead of picking a central banker economist, he put in some bonehead from the business world. Inflation went to like 20%. If you could get a mortgage for 20%, you were pretty happy. Not credit cards, mortgages. So Jimmy Carter lost his presidential re-election for 2 reasons. One, the Iran hostage situation, but that was really created from Nixon's stupid administration. Hostages. So I don't really blame him for that, but I forgot what I was even writing. But anyway, so that was part of it. And the second one is the 20% interest rates because he picked someone not qualified to run a central bank. Now, the interesting thing is we currently have a chairperson of the Board of Governors and the Federal Open Market Committee who is not a traditionally trained economist, PhD, money nerd. Kind of like what Jimmy Carter did. And that backfired for Jimmy Carter. So then they got rid of Jimmy Carter's central banker. They put in Paul Volcker, and he jacked up interest rates and killed the economy and killed inflation. He jacked up interest rates sky high. Didn't even wait between meetings, just right? And the U.S. economy fell, but so did inflation. Okay. So now we're looking at a situation where we can't get inflation even when we want it. So I think the Fed, right, we're at full employment and a whole bunch of other things, and still little inflation is low. Okay. So I think by cutting by 0.25 at full employment, they're trying to raise inflation. Okay. Not to save the economy. So it's not your typical scenario. Typically, when the Fed cuts interest rates, the US dollar gets strong. This is not that situation. So I keep trying to tell you, like, be very careful. What I've said in the past doesn't predict future results. In the past, when the Fed cut interest rates, the US dollar was the strongest currency in the world by far. It was ridiculously strong. Okay. That's because the rest of the world was choking on its own blood, and they were getting money out of their financial system and buying US bonds with it. Well, the rest of the world's doing what it's doing already. So this isn't really, if they're cutting interest rates to create inflation in the United States, this is sort of irregardless of what is happening everywhere else. Yeah, Oscar, but not for now, not till the third week. Okay. Okay. So anyways, they're cutting interest rates. I'm hoping to see US dollar weakness. They cut by, right? Why? Well, first of all, money is now cheaper for US corporations to borrow, which will actually increase their profit margins because you have to borrow money if you're a business. But now borrowing's cheaper, but you're not likely to lower your prices. Why would you lower your prices? The economy's booming. So now corporations just get a little bit more profitable. What happens to the stock market? What happens to housing prices? What happens to food prices? What's happening here? What do we call when the stock market's going up, the real estate market's going up, food prices are going up? Then this is going to put up energy prices. What do we call all this? Yep, Ramesh, that will start around the third week of August. This is called inflation. Okay? And that's what the Fed is trying to do. When the Fed cuts interest rates, they're making money cheaper. Okay? Now, if we go to quantitative easing, well, first of all, I don't think the Fed, certainly not this year, but they're not likely to do quantitative easing. But anyways, let's talk about US dollar. Why does the US dollar get weak if the economy is booming and everything's going up? Why does the US dollar weaken if everything is so good? because we buy our t-shirts from other countries, because we buy lawn chairs from other countries, because we buy TVs from other countries, we buy laptops from other countries, we buy phones from other countries. Right? See what I mean? Go to Home Depot, try to buy something made in America. Right? It ain't happening. Everything comes from somewhere else. Why? Because they'll do it for cheaper. So the money leaves the United States. When things are good, the money leaves the United States because they're buying a bunch of crap from other poor countries. It's how capitalism works. If you don't understand capitalism, you should read like Machiavelli. You should read about 14th century Italy with closed borders. The opposite of what capitalism provides, really. Open borders changes things. Specialization changes things. Free trade changes things. So imagine all that happens, and then the trade war is over, and all that kind of stuff. All that adds up. Now, what about euro? How are they supposed to create inflation? Yes, Mr. Connor, it's super expensive too. Yeah, that's right. Rami says Machiavelli's book is called The Prince. Yes. Yeah. Right? I've read them all. Right? I've read The Prince. I've read Hobbes. I've read Locke. Smith, of course. Machiavelli. Ricardo. He's the one that did it on rents, right? Ricardo. I mean, all the way up to current Nobel Prize winners. I have their books. I've read the entire history of economics, which is pretty cool. Yeah, so interest rates are basically already zero or lower. So the the ECB is going to have to do quantitative easing. Okay, and what will that do? Lower the euro. So start thinking about this. Well, if the Fed lowers interest rates and the dollar weakens and the ECB does quantitative easing, it'll lower interest rates too. It's kind of doing the same thing slightly different ways, and there's different consequences and stuff. But what will you be buying? Okay. Okay. So that's what I want you to think about now. That's your homework for today. If dollar's coming down, if euro's coming down, if pound's going down, but inflation's going up, what do you buy? What are you going to invest in? Okay. Well, TBM, what I've explained before is I don't trade USD yen. I trade USD or yen, or USD and yen. But I do not trade USD against yen. Okay. Uh, Lungster King says interest rates ran blah 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 blah, but that was like a week ago, man. Right? So let me ask you then. What is the next move by? Well, I guess there's too much. There's probably a lag in the conversation, and the answer's too detailed. So let me put it this way: South Africa cut interest rates to 6.5%, and basically said they're not going to cut interest rates again. So, like we just talked about the Fed, it's not that they just right. I said if they cut interest rates this week, it's not that they cut, that's already been priced in. So it's really what are they going to do next that creates a trade. So cutting interest rates for South African rand will weaken the rand, but then they said they're heavily data dependent, which is another way of saying they're totally fine with 6.5%, that they don't expect to cut anymore. So therefore, and that I think that happened here, and we traded it live in the webinar, right? That's the likely consequence. Maybe it was this one. Either way, same thing. I don't think I'd want to play dollar against it though, because dollar's too expensive, right? So what's our alternative? What's our alternative to USD Rand for a swing? Well, the alternative, of course, is the much better alternative, and that is Euro. Nice! Look at this trading. Now this one's fun because it sets up every night. Now I showed this to you guys like, I don't know, a month ago. But if you start breaking it down daily and weekly, it's like over and over and over again, right? Look, boom, sell, look, boom, sell, look, boom, sell, look, boom, sell. Like every time it's just perfect setups. Boom. Right? I ran out of weeklies. And notice how it all set up right where you'd expect it. The top of the month, right? But if you break it down to dailies even, this one's great. Nice little trade setups. Okay. Nice, 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 nice. What else? We need on every time frame. This is a great one. You know, it's like, you know, we don't even need this. Let's do it this way. Let's go template. Do we want weeklies? I guess I could leave that there. Let's do it this way. Delete. Right. Actually, I didn't even do that well. I'm trying to show you that it's just very basic price action. I mean, this is as close to fish jumping into the canoe as you could possibly get, right? But like my other point that I had just made is if you're at your charts, either right before Friday close or right on Sunday, Monday open, look at these, look where price is. It's like stupid exactly where you want to sell. It's just like fish jumping in the canoe. What can I say? That's right, Mr. Connor. Yes. So what I'm saying is if the Fed cuts by 20 basis points and then says they have to hint, it has to be interpreted, okay, as not getting the other one. So some people were pricing in 25 basis points. Then they started pricing in 50 basis points. It's supposed to be 50. But what if the Fed does one and done? Gostin says, Wayne, thank you for the coupon code for the summer school. I took advantage of it, and the courses are great. Hey, man, thumbs up. We all should drink from the cup of knowledge, huh? I got creamed in one of my classes this summer. I just got my grade today. It's really bummed out. This is how the class went. There's 2 papers, 4 quizzes, and a final. First paper, A. Second paper, A minus. Now out of the 4 quizzes, 100%, 100%, 90%, and then like 80%. So I feel pretty good walking into an A, right? Or God forbid an A minus. I got a B plus. He must have just absolutely failed me on my final exam. Just an absolute flop. Just destroyed me. I dropped from an A to an A minus to a B plus on a 2-hour exam, and I answered all the questions. Just an absolute destroyed me. What the hell? Now, the other class I got an A, and it's great. So, like, I'm just saying, we all have our education, right? So, I wonder if I can even pull this up quick enough. Check this out. First paper, 98 out of 100. Second paper, 97 out of 100. Final project presentation, a 15-minute presentation, 96. 30-page paper, 97 out of 100. Final exam, a 3-hour exam, 96 out of 100. And the final project presentation, the final project, he's been doing the class for something like 11 years. Our class had something like, I think it was like 11 presentations. So he's been doing it for 11 years. There's one class at 11. So let's just say twice a year, 10 each, it's 20 a year. So he's seen 200 presentations. The best he's ever seen. So I nailed that one. And I thought I thought I was walking into an A on the other one, and I got destroyed. Destroyed. I made an argument that there's a distinct difference between ethics and morals. But here's an ex-Marine who went to Annapolis And I really want to impress this guy. He ran the PhD program at Harvard's business school, and he hates my guts. He hates my guts now. He destroyed me. It was terrible. So first B I ever got, like it's a B plus, but it's the first B I ever got with my feet on Harvard soil. So it's really bad. I feel really bad. Yeah, Mr. Connor says 30-page paper. Well, remember, I'm doing twice the work that everyone else at Harvard is doing. There's 6,500 people at Harvard summer school. The 9 of us did twice the amount of work of everyone else. So to bang out a 15-minute presentation with a 30-page paper and to do the best he's ever seen, yeah. But I must have screwed up somewhere. I don't know. So I paid the penalty. So anyways, did I say ex-Marine? Sorry, my apologies, Jim. But I hit a chord with them. Yeah, I hit a chord with them. I don't know. I would assume it's impossible to get such a bad grade on the final exam. I was destroyed. But yeah, thank you. Yeah, it was a lot of hard work. Huh? But I got the ring, Bubba. Oh, can't see it, right? Got the ring. So how do you got to do it? This way? There it does. No, that's upside down. Whatever. I don't know how. I don't know how I got that. Is that Huawei? Yeah, Forex can be boring for sure. If you're trading your plans and stuff, everything seems to happen like the way you planned. I've said for a long time, if Forex is exciting, you're doing it wrong. But how many people are excited about their regular jobs? I'm so excited about being in, middle management. Yeah, thank you. Thank you, guys. Yeah, no, it's funny though. I'm bummed out. But yeah. All right, did we do gold yet? No, we didn't do gold. All right, let's do some gold. Okay, this is our buy zone. Are you a buyer? I believe I talked about this yesterday. I mean, almost certainly talked about this yesterday as being a buy zone after a breakout, right? I think I actually wrote breakout. Didn't I? Anyways, if I was a bull here, it seems to me that there are bulls there. And then last week, this is the bullish entry. So those guys probably live here, don't they? Ellie says ethics and moral. Yeah, there is. But you gotta pick your battles, and I'm somebody that you're not supposed to do it. You're supposed to write a paper that gets you the grade. I don't know. I like to challenge the thought process, and very often it's just the wrong forum. And of course, when you don't have enough time, you're going to write a piss poor paper that doesn't argue the point very well. So I don't know. But that's me. When I told my wife what I did, arguing with a Marine about morality, she's like, oh my God. And then I told my cohort, I'm like, yeah, I argued of morality, and it came down to does a business or a leader of a business need to be moral? And I said no. Businesses are not moral. They're businesses. They're supposed to provide quality product and service to customers and be able to have some profit left over for shareholder value. There is no morality. Now, it needs to be ethical. It shouldn't lie, cheat, and steal. But corporations are not moral. They're not human beings. You can have an immoral scumbag of a leader of a corporation and have it be a great corporation. Right? So I'm the type of person that might say, like, Hitler was immoral, but he was a hell of a good leader. And they're like, you can't say that about Hitler. Well, dude, he almost won. And then I'll argue Mother Teresa's selfish. What? You can't say that about Mother Teresa? I'm like, hey, look, she was a human being too. Yes, she wanted to take care of people of Calcutta. That's great. That's true. That's good. But she, but she might have had some personal satisfaction in there. Right? I don't know. So anyways, a lot of, and then I get caught up because I like the conversation. If you get all pissed off, like, you can't say that about Mother Teresa, I'm like, okay, then let's talk about it, bro. But, I don't know. Anyways. Oh, Giga asked a great question. Why do we need fundamental analysis, but visually we still need to see which currency is strong and weak? Okay, let's put it this way. Fundamentals will tell me whether I should buy or sell the US dollar this year. Okay? That's why someone said fundamentals are too exhaustive. Why? I spend 1 hour a year. It's not exhaustive. Okay? That's what fundies tell me. Should I buy or sell the US dollar this year? So why do we relative strength exercises? Why do we use technical analysis? Why do we use pivot points? Why do we use price action? Okay, so let's just call that tech. Technical analysis tells me if I should buy or sell the US dollar now. Well, there's no fundamental trade, Jimbo. That's your bias. So if you decided based on your analysis that you want to be a buyer of the US dollar this year, now you're just asking this question. Should I buy the US dollar now? And I see higher highs. Right? I see higher highs on gold. And I see bullish setups on gold based on weekly and monthly pivot points. So if I'm a bull on US dollar and I'm analyzing this chart with technical analysis, should I buy US dollar now? No. Yes, but you're right. Let's say at least half the time your bias will be wrong. Or let's say the market doesn't agree with it, or the timing of it, or the seasonality of it. But what I'm trying to get across, Jimbo, is like, most people when they come to my webinar, they're so inconsistent in their results that over the course of a year they make no money. Right? That's why we're all here, right? Because the market's inconsistent, and if you're inconsistent, you're never going to make any money. Whatever you make today, you'll give back tomorrow. Don't worry about it. And then, in fact, you might actually be losing money, and now you're really screwed, right? But let's say best case scenario, if you're inconsistent and the market's inconsistent, at the end of the year, you make zero. So you come to the webinar and you're like, help me, Wayne, help me. So let's say half the time, you don't get trades, no trades. Not because you don't want to trade, because you want to buy dollar, but the dollar is clearly bearish right now. So there's just no trades. You going to trade today? No. You going to trade tomorrow? Probably not. Did you trade this month? No, not really. Kind of looked at that M3, but that didn't work out. Oh, so yeah, you got one. You got one at the beginning of the month. Didn't work out. Yeah, now there's a higher high. You're going to trade now? No. I can't. Why would I buy dollar after a higher high? I can't. I have to wait for a higher low. This is where you sell this pair here and here. You don't sell this pair like this. So you're like, yeah, so it didn't really do anything this month. But the other half of the time, you are selling it like this. So you're buying dollars, right, when you sell. So you're selling scenarios like this. So the other half of the time, you're profitable. Or at least 2/3 of your trades are winners and 1/3 is a loser, but you're profitable. Right? So 50% of the time you're somewhat profitable, either moderately profitable or very profitable. And the other 50% of the time you don't get any trades. Right? Is it going to get you a yellow Lamborghini? No, but you went from maybe not losing money to probably definitely losing money to now probably making money. And then that buys you time to figure out how to trade, right? And so what Jimbo was saying is, if you decide on a bias based on your fundamental analysis, which is a long-term analysis of macro trends, there are going to be significant periods of time where you don't trade. But having that control and that consistency not only leads you towards profit when you're trading the right type of trade in the right market conditions, but also saves you from the wrong type of trades in the wrong type of market conditions, right? Where you go from, you might not go to making big money, but you definitely go to stop losing big money, right? And you'll start to see big changes long run. Okay? Okay? Mr. Connor says, why does the Fed care more about PCE? Okay, there's another great fundamental question. I won't get into chained and unchained economics. Okay, but let's do it this way. Most people, let's say everyone, is familiar with CPI. And that CPI is a basket of goods and services. Okay? PCE is a basket of goods and services. The newspaper talks about this all the time. The Fed uses this. What's the difference? Okay. Now, I've actually done like the math on it. It's kind of like a final examination type question where you have to bust out the calculus, not calculator, bust out the calculus. But what's the difference? How does this basket of goods and services adjust to changing prices? Let me give you an example. Let's say in CPI, the price of apples is in the basket. And there's a disease in apple country that devastates apple production. And apples go from $1 to $20 each. Okay? And it stays that way for 2 years. PCE has apples in the basket. Apples go to $20. Well, let me ask you something. What do you do, or what do consumers do when an apple goes to $20? Do you keep buying apples? What kind of behavior? Think of behavioral economics now. Behavioral economics. What do people do when apples go to 20 bucks each? Demand decreases, sure. They eat pears. Thank you. So PCE says, oh, snap. That doesn't look right. Of course, nobody's buying $20 apples. They're buying pears. So the PCE takes the apples out of the basket and puts pears in the basket. Meanwhile, CPI is still going, oh my God, $20 for an apple. Okay, it's called the substitution effect for those that have studied economics, so on and so forth. Behavioral is very interesting. So you can dumb it down like this. PCE tries to incorporate behavioral economics in their calculus. They're calculating inflation. So in their algorithm, they're slanting toward behavioral economics, and they'll adjust. They'll adjust the basket more quickly, where CPI will not. We'll bitch and complain about $20 apples that nobody's buying. Okay? Was that an easy explanation? By the way, I think if you went to college, they wouldn't be able to explain it like that to you. Like, your professor would not be able to explain it that way to you. Most likely. You got it here for free, baby. Okay, now free parking says, now why are there core prices where they remove? And that has to do with volatility. So they want to compare the two. It's really comparative. Okay? They want to say if there's an exogenous shock. By the way, you have to drink tequila every time I say that. If there's an exogenous supply shock, they'll see PCE and CPI rise, so they'll analyze that and get the number. Then they'll say, is it oil prices doing this? Or is it apple prices doing this? Or is it everything in the basket going up? So now you'll compare and say, well, let's look at the basket without oil or gasoline. Let's look at the basket without wheat, for example. Let's look at it without corn prices. And you'll see, oh, well, insurance and rent and all these other things might actually be falling. Meanwhile, the inflation is coming from not from economic activity, but a shortage in oil and gasoline. So now you want to compare the two and try to explain the economics reality outside of the prices. It's like, what do the prices mean? Is the economy booming, or are we just short of oil? Right? A shortage will drive up prices. What we want to know is there economic activity driving up prices? There's a big difference. Okay? All right. So thank you for coming to the webinar today. Thank you very much for being clients of Traders Way. If you're new to Traders Way, please visit, join the family, open up an account. I use a variable spread account, but you can also sign up for a fixed spread account if you prefer scalping, or if you don't like spreads, you can consider an ECN account. I'm not sure what the swaps are and all those other accounts. I've always used a variable spread from the beginning of time. So if you're swing trading and stuff, just double check before you make that decision. But visit tradersway.com, get that set up. If you want my chart templates and my chart profiles, all these profiles and all the templates in each side, inside of each of these, that's all downloadable for free. charts.fxbootcamp.com. Please like and subscribe and leave a comment, please. Now, it often takes YouTube about 10 minutes or so to get this video uploaded and sent out to you. So when I end this webinar, can you just go to yesterday's video on the YouTube channel? Just go to yesterday's video and leave a comment there, and you're done. Okay? So again, thank you for being on my team. Thank you for being in my life. Thank you for the hard work that you put into this. And I think we're going to have a rock and roll week. It's going to be interesting. So I'm glad we're doing it together. I'll see you tomorrow. Thank you, everybody.